Now, at this point in time, you've likely heard of NFTs, and more importantly, in recent history, you may have heard of this former OpenSea executive who was charged with insider trading with NFTs. So, in this video, we're going to just cover that at a higher level and then go into what exactly is happening on the regulatory front when it comes to NFTs. Now, if you're curious to read more about the indictment, you can see this here. Essentially, this is the head of product at OpenSea, which is a centralized platform for buying and selling NFTs, who was indicted on two charges. Says here for with wire fraud and one count of money laundering. Now, essentially, what happened is that this individual bought NFTs that he had prior knowledge of being that would be listed on OpenSea, and then sold them once they were listed on OpenSea for some 2 to 4 times the value of the initial buying cost. And essentially, the charges that were levied against him were a sentence of 20 years in prison. So quite a serious crime here. Now, in general, NFTs are presenting themselves as a new asset class in crypto, and particularly they're coming with some unique legal challenges that aren't entirely applicable to other crypto assets. So, the next two articles here, this is one by JD Supra, and this one right here is by Jones Day. They cover the sort of the regulatory and legal landscape of NFTs. So I definitely encourage you to review these. And all in all, they explore how NFTs they traverse a number of sort of legal fronts, transactions laws, of course, security laws, and IP law specifically as well. Now, there's still a lot of there's still a lot of legal provisioning that's being developed around this. So it's not really all the guidelines around NFTs are not clear. There's a lot of discussion about NFTs being potentially falling under, being issued as a security essentially. But this is only really true for NFTs that are fractionalized. And for what fractionalized NFTs are, we'll be covering that in future videos. But essentially, it's taking an NFT and dividing it into some amount of parts, so that even though the NFT itself has, is a single entity and it's unique, individuals can own parts of it. And there's practical purposes for that, which we'll cover in future videos. But the one that actually really stood out to us that I'd like to share is this last one here, where you can review this, is the fact that NFTs at large tend to hold some of the same characteristics as bearer securities. For those of you who may not be familiar with bearer securities, I definitely recommend checking this article out, and I will be sharing this, of course, in the on the bottom as well of this video. But essentially, bearer securities don't actually have to be registered with the issuer. The holder of the security, him or herself, is the beneficiary. And they hold the same type of anonymity as cash does. So essentially, if you have the NFT, you're essentially the owner of it, in the same way that a bearer security would have the same bit if you have the papers that indicate your ownership to a bearer security or to that security. Now, of course, this is not always the case. For example, if you are to buy this from a centralized platform like OpenSea, it's not until the transaction is complete that that's the case. But in a bilateral transaction with no intermediary, more often than not, that would be the case. And so naturally, as you can imagine, the art market in general has been used for organized crime and for money laundering purposes in the past. So nowadays, OFAC has been carefully watching the NFT market, as is covered in this article here, specifically for tracking money laundering that might be happening through NFTs. And that you can find right here, the Office of Foreign Assets Control. As usual, if you have any questions, please do not hesitate to ask. Thanks.